May profits be upon you. Let's take a good look at US30. I'm looking at the daily right now, and what we can see, we're looking for breaks of structure, right? We have a break of structure here as price makes this low and then breaks that structure. Now, the first thing you want to make sure you make a note of is the strong low that made this break of structure and that created this high. All right. If a low makes a strong push, or has a strong impulse, and breaks the high, or breaks a structural high or a significant high, in that as far as that is concerned, you want to call it a strong low, and that means it's tradable. As you can see, when price does return to it, we can trade off of this to the upside. Got it? And when a high makes a low that doesn't create a new low, doesn't break a low, that makes this a weak high. And when this high is weak, that means it's going to be ran for liquidity up here. You know what I mean by running for liquidity? We're going to run the lows or we're going to run the highs. That means market makers are going to bring price up to that point to stop out the stop losses, to stop out the people who took shorts, and to trigger pendings for people who are taking longs, looking for breakout trades. This is what the market makers do. That's their job. They bring them up, stop them out, and trigger the people who are long and take them back on the other side where their stop losses lie. Boom. It's a double whammy. That's the name of the game. Anyway, moving right along, we have a break of structure here, right? Boom. So what does that mean? We have a strong low. Got it? And if and when price returns here, there's a high probability that we'll be able to take a long from this demand zone. Okay? And that means this high is vulnerable. All right? That means this high is weak and it's going to be ran for liquidity. Keep that in mind. Now, I also want you to make note that we have a bearish engulfer here. This is forming a new order block. All right. And what happens is when price forms these new order blocks, right before they leave, that looks like a really good one, right? Right before we're looking at what happens with the next candle. What you usually see is price come back and test the base candle of this bearish engulfer pattern. Come back and test the base candle, mitigating the order block, and then moving on. All right. This is a bearish pattern. All right. So you expect price to go lower. But before it does, it usually goes up and then comes down. And you can see that many times. Here we go. Here's a bearish engulfer. What does price do? Comes up to test and then down. All right. This one came right there. Okay. Bearish engulfer. Boom. What did price do? The next candle comes up to test and then down. All right. This one didn't go all the way down though, did it? But it respected the bearish engulfer here. All right. Now you see it wicked above, but it closed back below the bearish order block and then dropped down. Why did it wick up? So it can take the liquidity from up here. It took the people out who were taking shorts took their stop loss and then fell. You'll see that process repeated over and over again. Anyway, let's move on. Okay. I always take time out for a moment of instruction. Okay. Now, if we go to the 4 hour, what do we see? We can see that we are in this daily bearish order block here. This is representing supply. We'll also have a an area of demand here, all right, which price has stopped in the middle of. And I'm looking to see on a lower time frame if price here, I thought that was a drawing tool, if price will come up here and then crack down. Why? There's a couple of reasons why it may want to come down because you're always, excuse me, you're always asking why. What does price want to accomplish? Well, there's a couple of things to accomplish. One, we can take the liquidity from these equal lows. You're always looking for equal lows and equal highs for liquidity points. All right. People are taking longs here. There's a lot of stop losses here, and people who are waiting for breakout trades to take shorts. All right. So price can come down there for that. Also, this is an inefficient price move. If you look at the daily, you'll see that this is all an imbalanced move. What do I mean by imbalance? It's inefficient price movement. What you want to see when price moves like that is this. All right. Always coming back with a wick or something. All right. This, you see how these wicks are? This is efficient price movement. Okay. But this is not. And where it leaves an imbalance. If it's all buys, price will come back by to mitigate out of to balance off what is imbalance by bringing the sells, right? These are all buys. Price will come back and correct that inefficient price movement. Okay. Now, so we have an inefficiency for price to fill, and you want to see that on the way to a demand zone. You want to see that inefficiency on the way to a demand zone because that lets you know price has incentive to come down here. All right, the market makers want to come down here to mitigate out of sells that they had. This was a sell before the buy move, sell to buy. All right. Although their market makers are making profits with their buys here, they are in drawdown from the sell orders that they have, and that's why price comes back to mitigate out of those sell orders, and then resume their bullish momentum and their profits with the buys. You understand? Okay. So we have a couple of reasons to come on down. All right. What would be the catalyst? All right. We have the FOMC. We had the FOMC give us this here, and we have NFP coming Friday. Okay. Who knows how how that may affect the markets? We don't know yet. I don't predict the market. What I try to do is just react, right? That's all I'm in the business of. Now, what I want you to do is to go on the lower time frames and look here. What you want to see is price shifting from bearish to bullish momentum. If it is, you can take a buy here on the lower time frame, 15, 10, 5, 1. That's a lot of there's a lot of money to be made on those lower time frames to take a buy to sell move. And what you're looking for is the move up to test that base candle I was talking about earlier. This is the base candle, and this is the engulfer candle. All right. Price may come up here, test it, and then come down. Okay. So that's what we're looking for. And you can catch that here. Now, if price is not going to transition, it could very well drizzle on down, take out these highs, I mean these equal lows, excuse me, and drop, take care, balance off this inefficient price move, and come and mitigate this order block. We don't know, but before this is an inefficient price movement, and price is going to balance off that price movement at some point. It usually happens sooner than later. All right. It could come down here, straight down. It could come straight down and then come back and mitigate. You know, it could. So stay flexible, see what happens here, maybe catch the buy move, and then sell from up here. Bing, bang, boom. Take the long from here. Bing, bang, boom. We'll see how it works out. That is my idea. I hope you find it helpful. If you do, leave a like. All right. That would encourage me to put out more free content, more free education and training. And if you want to check out my channel, going down there to where it says where you can find me, and you'll see a YouTube button and a Twitter button, you know, and click on those. All right. I'll see you in the next video.